this is Marian Beckery, and this is my video assignment for week 4, the technical analysis. The crypto pair that I chose for this assignment is Binance and Tether. I thought that it would be like a good pair for the assignment because they have enough liquidity and they're quite volatile. Oh, apologies. And that is what I want, since the trading strategy that I've been practicing for the past few weeks is the scalping strategy. So I'm always trying to look for markets that are relatively volatile. I'm also using like a 5-minute time frame to look at the chart and to look at the price levels. And I already have a couple of indicators in place. But first thing that I need to do is to establish the direction of the trend. And you could tell that, like, yeah, for most of like the day, the market has been on a bearish trend. Apologies, I zoned out for a second. The market has been on a bearish trend. So in parallel to this, I also want to look at, like, when are good entry and exit points for me if I'm, for instance, I'm going to sell my coins during this trend. So what I already have in place is the moving average convergence divergence indicator, which shows me like when are like future trend reversals about to occur. I can see that when there is the moving average line, which is in blue, whenever it is crossing over the signal line, which is in orange. So whenever the line is crossing over the signal line, I know that there is a bullish trend reversal. And whenever it is crossing below, I know that there is like a bearish trend reversal. And you can see it here. The moving average line, it crossed below, and here there is like a bearish trend that is occurring. Something else I want to take into consideration prior to like placing an entry is obviously like my risk, where I'm going to place my stop loss. But in order to determine these things, I need to look at where is my support and resistance in terms of like price movement. And in order to figure that out, what I need to look at is the candlestick pattern in like more closely. And I need to see at what point did like a higher low hit a support line. And then afterwards, a couple of candles afterwards, or directly like the candle is like right next to it, hit the same exact price level, but could not go any lower. Once I have like 2 or 3 candlesticks that kind of like confirm that, then I know that there is like support around here. And I would also know that I could place like a stop loss as close as possible to the support line if that's part of my trading strategy, for instance. So I can benefit from, like entering the market and taking advantage of the volatility for as long time as I can. So like, for instance, like say I entered the market around here, I could take advantage of all of this time in the market until like my support line is broken. So yeah, I've briefly touched upon, like the concept of like a stop loss. It is very useful to put a stop loss, especially in a very volatile market. But also it's a good practice. It's a good habit that is part of like your risk management. Like your risk management. I know that a relatively safe and reasonable like risk percentage on a trade is usually like 2%. So yeah, like if I have 10 euros, then I would only try to risk 2% of that, because it would leave me enough capital for me, if I were to fail on that trade, to perform other trades that could potentially be profitable. So with this in mind, I want to think about what is my purpose when I am placing the trade. And this is also why it's important to think about like a trading strategy. As I mentioned earlier, like I'm very much interested in learning and practicing how to scalp. So the purpose of a scalping strategy, as the name suggests, is to really enter and like we can pretend that, I don't know, like these are hairs. The purpose is to like really enter and to take profit as close as possible, or like as quickly as possible, so that you're really benefiting from like those tiny differences in the price level. So for instance, like I could yeah, and you can even like see it here, like in the difference of like the prices. Like I'm not gonna make like a tremendous profit. If I were to enter the market at like 600 and I would were to exit like the market at like 602, for instance, in theory, like if I've placed like only like a couple of trades, that's not a lot of money. But say for instance, like I decided to place multiple trades at the same time and use the exact same strategy and like exit the market like at 602, for instance, then that could be very profitable for me. When you're scalping, you're placing in theory like multiple trades per day, like not just like 10 or 15, but like in theory 20, 30, or even more. So for instance, if that's my strategy, then I know that like my profit target is not going to be very high. And I also know that I'm not going to be in the market for a very long time. So I would also think about that when I'm placing my profit target, or just like when I'm thinking about like my exit strategy, like when am I going to like leave the market? And on that note, when it comes to leaving the market, for instance, I can also rely on another indicator to kind of confirm to me that, like, for instance, around here was really the end of like the trend that I took advantage of. So like, yeah, like I would have like entered the market around here, remember? And then like around here, I'm starting to have some doubts because I'm not making as much profit anymore as I did over here. So I'm gonna use a different indicator to see if that is indeed the case, if like I should think about like leaving the market soon if I haven't placed my stop loss yet. And in order to do that, what I can do is I can couple my moving average conversions divergence indicator with the relative strength index, which indicates the volume level of trading that is occurring. And then I can see that indeed, yeah, like I entered, whoopsie. I entered the market around here and I can see that I'm going below the 50 line. Below the 50 line, I know that, like the prices are starting to fall and that there is more volume of people that are selling than buying. So I also know that, this trend that I took advantage of is about to end. And therefore, I would think about exiting the trade if I haven't already placed a stop loss around that level automatically. Um, I think in theory, I've covered the most important concepts of a technical analysis. At least I hope. And I hope this was useful. This is the end of my assignment. Thank you.